Hi there, and welcome to my channel Simply Stocks. And today I'm going to talk about five companies, as this is the Holi special. So happy Holi to all of you. And I'm going to discuss about five companies that could do well over the next 4 or 5 years and is looking good on the valuations parameter. So let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position to any share that I talk about should do with their own due diligence and research, and I'm not in favor or against any company that I talk about. I am not a member of the NSC and BSC, and that I am not a portfolio advisor. Whatever discussions with respect to markets or investments I do take, kindly take that on note that is laden with market risk, and whatever decisions with respect to investments or trading you take, kindly do consult your financial advisor before doing that. Now, before I talk about these five companies, here's small request. Can you support me on Patreon? Once you do that, it'll help me grow a channel, help us ask me questions, seek out answers in greater detail. Once you get the $10 membership, you'll have access to my portfolio, my watch list, discussions on domestic and global economies, analysis on different companies, updated watch list, long-term pick from my end on a weekly basis, and answer to all your queries will be there. So kindly do check the description. Now, in order to discuss about these five companies, let me take you to the screen of website. So the five companies I'm going to talk about are CDSL, Zomato, SRF, Interglobe Aviation, and Fortis Healthcare. So these are the five companies. Let me just discuss in brief all of them, and then you'll understand as to why I picked them. So CDSL, one of the prime, you can say, depository, one of the two prime depository in the business, in the share trading space. So this is a great financialization, you can say, theme that one can play out, especially after the decline that we have seen over the last 3 months or so. A disclaimer, I have this in my portfolio. So the stock has fallen from around 2000 all the way to 1100 or so level, 1070 now. The stock is down 46-47%, and normally we have seen that these type of stocks during the market turmoil decline by about 50% or so. So if you see here, from around 800 the stock fell all the way. It kept falling and it fell to around 430, 430-ish level, nearly 50%, and then went up from there on in from March 23. So yes, there is a chance that this could go down another 10% from here, but over the next 4 or 5 years, you should be seeing the stock doing well. It is one of the central this is CDSL, the depository service, and only two of them do hold at the moment. So it is a competition between two NSDL and CDSL, and so it is a very interesting business in which there are only two players in there, and the margins are pretty good. Although margins are going to be hit a bit because of the FNO segment going away. Although companies that used to be traded in FNO do not come into the CDSL framework, but what people thought was that those people who were doing FNO and getting charged even more may just come back to stock investment, but they just left the scene altogether. So I think this should continue for a month or so, probably a quarter or so, but over the next 4 or 5 years this should become big, because financialization and getting into the stock market and investing into the markets is just picking up after the pandemic, and it has been just 4 or 5 years into it. I think this is a decadal theme. 10, 20 years down the line is going to only grow. And so valuations now trading at 40 times. If you look at the P, historical P from a 5 year basis is around 45, 46 on that basis. And on that framework, even on a 10-year average P, it's around 39. So we are very close to the 10-year median for the stock. Even though I would believe that 1 or 2 quarters will not be that great, I think these are decent levels to start accumulating from a 3 to 5 year, 6 year point of view. The numbers have been decent, but the valuations were so stretched that the stock fell. So it was trading at around 80, 90 times, 76 times at its peak. And the growth here was around 20, 25%, 130 crores growing to 161 crores. Quarter on quarter, we saw a degrowth in margins and in, you can say, operating profit, and that really signaled a relative short term top, I would say. 1 or 2 quarters of pain, and things should come back into focus. So, this is my first pick in this domain. Second is Zomato, again a stock that I hold in my portfolio. So that's a disclaimer. Now, Zomato has come down about 30% from the top. A 2 lakh crore company, now a profitable company, trading at around 11 times current sales. And if I take into account March numbers, expected March numbers, uh, it is trading at around 9 9.5 times or so. So we expect the overall yearly sales of around 21,000 crores, and the stock is at 2 lakh crores. So this is trading at somewhere around 9.5 times FY25 earnings. Now, what I believe is the trigger points for the business is that they are expanding big time, and there are only two players in this segment which are expanding big time. So the numbers on the bottom line might not be that great, but on the sales front would be pretty big in the next 2 years or so. So over the next 4 or 5 years, the company should end up doing extremely well. We expect a 50 to 60% CAGR over the next 2 years. That would percolate down to, you can say, sales numbers of around, uh, let me have a look, around 50,000 crores or so. 50,000 crores of sales by FY27 is what we expect. Based on that type of sales number, the stock is trading at only 4 times sales, or just under 4 times sales at the moment. So very attractive. Normally, if you look at price to sales, Zomato has traded at, if I take this into account, the average has been around 13 times over this period. On the lower end, it has come to all the way to around 8 times or 7 times or so sales. And on the upper band, in the recent years, we have seen 18 times. So it has traded at 12, 13 times or so. So even if I take on a 50,000 crore basis, some 13 times, then we are looking at 6.5 lakh crore market time. That is the kind of growth we expect in such a business which is exploding at the moment, and especially with both parents working, there would be more orders that would be trickling in over the next 3, 4, 5, 7, 8 years. So good large cap company which is profitable in nature, which produced very decent numbers year on year, 162 crores of operating profit versus 51 crores. And on the bottom line there was a hit, and only because of the fact that they are expanding, and there is interest burden and depreciation burden because of the expansion, which could continue for the next 2 quarters. So the stock may not perform for the next 2 quarters, maybe in the range of 240 to 200 and all that, but over the next 3 years, the returns could be very decent, and over the next 7, 8 years, this could be a big theme to look at. Third in the list is SRF. Now, chemicals are coming back into focus, and with these tariff war that is going on, I think there could be a chance. Now, this could be either way, but there is a better chance that India could get away with better deals compared to China. And so, what we'll end up with is that chemicals may benefit altogether, and large chemical companies like SRF uh, could be a big beneficiary of it. On the charts, also, the stock is looking good. After December has picked up pace over the last 3 months, have gone up by 30%. And so this is a stock to really look at, because the company has expanded over the last 4 5 years big time, and they have the expanded capacity at their disposal. And it is just that if once the orders kick in, they are going to supply big time over the period. So valuations right now is looking stretched at 76 times. 3 months ago, the stock was trading at around 60 times or so. If you look at on a PE basis, the stock in December, if I look at it, the stock in December was trading at around 60 times, as I said, 58, 60 times. Now it has picked up pace, but the market is you can say expecting and anticipating very good numbers from say June quarter onwards, not March quarter but June quarter onwards. I think this is a stock to really look at because the stock overall hasn't done really much over the last 5 years. It is now breaking out. So if you see here, the peak was formed around April of 2022, and over the last 3 years, the stock has been hovering around there and now is breaking out. And on the numbers front, finally the numbers on a quarterly basis has picked up pace. So September to December, if you compare, 3424 crores of sales have become 3490, and margins from 16% has expanded to 18%. So low on the lower end from around 25% margin dipped to around 16%, and now the margins are picking up. So chemical sector, which looks like is now coming back after 8 9 years, may just do extremely well. So this is one of the stocks to look at for consistent growth over the next 5 6 years. I think at least a 6 year cycle could be there. 5 to 6 year cycle could be there for the chemical sector. So a large chemical pick from my end. Even if you see from a shareholding pattern as well, FIIs have stood tall here. Yes, from 20%, the holding has decreased to around 18 and a half, but not much decrease is there. And public shareholding is around 13 and a half percent, which is not that great. So overall, strong company, strong management, and strong hands holding on to the stock over the last many years. So this is really picking up pace, and one stock to look at. Fourth in this list is your travel and tourism space, which I think is going to pick up with this government initiative of giving tax incentives for people who are who are earning up to 12 lakh rupees. 182,000 crore market cap companies for large company again. Interglobe Aviation trading at around 4,700 into the aviation space. Best you can say airlines here in India, producing very good numbers. Again, a stock that is performing well in this, you can say, a tumultuous market. And the reason it is performing is that it has not performed that well over the last 2 3 years, and has been, I mean, uh, over the last 1 year or so has been in a range. So 43 4400 on the lower end to around 5000 on the upper end uh, has been what the stock is doing. Uh, on the PE ratio front as well, is trading at around 30 times. But now I think the best times for the aviation space is going to come up once these, you can say, funds trickle in for people across the board who are earning 12 lakh or more. And I think they are going to spend more on travel and tourism, and probably expenditure would go into healthcare rather than anything else that people are thinking. So I think numbers were also decent in December quarter. They did 22,000 crores. So if I look at it in December, they did 22,000 crores versus 19 and a half. So that's around 10 and a half, 11% growth. Even on the profit front, they were fine because September quarter wasn't that great. And so margins have picked up quarter on quarter. Yearly, there has been a dip of around 3% on margin, but margins are robust around 23%. And if you look at the shareholding as well, there's only 4.7% public shareholding, and FIIs and DIIs hold big time. So a very good large company to look at from a 5 year perspective is Interglobe Aviation. And finally, in this list is Fortis Healthcare. In my opinion, healthcare could be a segment to really look at from this time frame, because spend on healthcare is only going to increase over the next 5 6 7 years as the Indian population age and people become more aware of taking care of their health. So there are both factors are in there, that the population is aging, and the second thing is that people are becoming more health conscious, and they're going to spend more on better healthcare as they earn more, as they have more savings, and the per capita income picks up. So private hospitals are going to be beneficial. So this is a mid cap hospital company, Fortis Healthcare, that has done well over the last 3 4 quarters, last 1 year. And now that the stock has come down from around 750 all the way to 600, 20% dip, from the top. It is trading at only 58, 59 times. If you look at a 5 year average, the stock normally trades at 55, 56 times. So very interesting levels to probably look at or to get into. If you look at the quarterly numbers, in December they did 375 crores versus 284 crores. Again, margins expanded year on year by around 200%, 2% overall. And on the bottom line also, they did really well. 280 crores pre-tax profit versus 183 crores. So that's a jump of 55%. So very good numbers, very decent numbers from the company. Even on the shareholding front, uh, uh, the company is doing well. Promoters hold around 31%, FIS 26%, DIS 30%, and public shareholding is just about 12%, which is reduced over the years. Even in that 12%, 4% is with the large investors, so around 8% public shareholding of free float is there. So very interesting company that has held out in this mayhem that we have seen, that has not fallen a lot. I think this is one to look after. So CDSL, Zomato, SRF, Interglobe Aviation, and Fortis from my end this Holi. Hope you're doing well and take care of yourself. So this was a video on the Holi special. Please like and subscribe my channel. Hit the bell icon so you can get my videos straight away when I post it. And kindly support me on Patreon. Thanks a lot for watching.